Good afternoon, my fellow traders. My name is Michalis. I'm one of the market analysts here at HFN, and I'd like to welcome everybody to another live trading session where we're going to be looking at the British pound against the US dollar. Today, we are looking at the British pound against the US dollar because, number one, the British pound is the worst performing currency of the day. It's the currency which has seen the most volatility, generally speaking, across the board. And today, Wednesday, the 26th of March, is one of the most important days for the UK. We've already had inflation released. We're about to have the annual budget released, and there will be a speech from the Chancellor at Parliament, within Parliament as well. And it's going to be a major day for the pound, for the FTSE 100, and the price of gilts and gilt yields as well. So today, as part of today's session, we're going to be looking at two factors. Of course, we're going to be looking at why the British pound is the worst performing currency of the day, why it's seen so much downward momentum, what is triggering that price movement. But the second aspect that we're going to be looking at, and this is probably the most important, is that downward momentum going to continue, or are we going to see a correction? So we're going to be looking at what technical analysis is currently indicating, and of course we are going to be looking at all possible scenarios, not just necessarily where downward signals will materialize throughout the next 24 hours. So that's what we're going to be looking at as part of today's session. Now, the British pound against the US dollar, if we're looking at the open price, because the open price is here, ladies and gentlemen, it declined at one point. The lowest was minus 0.46%. It's slightly retraced. It's not corrected, but it has retraced. At the moment, it's looking at a decline of 0.33%. Regardless of that retracement, the British pound is still the worst performing currency of the day. Just for those of you who are intrigued and want to know the performance of currencies generally speaking, the worst performing of the day is the British pound. The second worst performing is the Japanese yen. The best performing currencies of the day is the New Zealand dollar, the Australian dollar, and also the Canadian dollar. The US dollar index is currently not the best performing, but it is seeing a slight increase in value today. So the reason why we're seeing a decline in the value of the British pound against the whole currency market, but also of course against the US dollar, the reason we're seeing that decline is because we're about to get the annual UK budget. Because of the fact that economic activity has been extremely weak, especially the economic data released over the past 2 weeks, has definitely signaled that the UK is in a state of stagnation. Not only in a state of stagnation, but is extremely fragile. So if something was going to happen to the UK, such as pressure from the US, the trade wars, slower economic decline, should we say, then because of that frailty, it's very easy for the UK economy to very quickly dip into a recession. We're not quite at a recession, but nonetheless, we are seeing economic stagnation, which isn't good either. Because of that poor performance of the economy, inflation has fallen. This is another negative factor for the British pound. Today, a couple of hours ago, the UK confirmed that inflation fell, whereas previously it wasn't expected to fall at all. Inflation was expected to remain at 3%. It didn't remain at 3%. It fell to 2.8%. So that's lower than expected. That potentially may trigger faster and also more frequent interest rate cuts from the Bank of England as well. So there's a lot of reasons why we're seeing today a decline in the British pound. So there is fundamental factors and reasons why investors are selling the British pound and opting for the US dollar instead. It's not just based on the price and technical analysis. There is also fundamental factors because investors are worried about the annual budget because the economy is performing poorly. Inflation has declined. We know that the UK is going to have to increase spending on defense, and because of that, they are going to cut spending, public spending. And also because they're going to cut public spending, ladies and gentlemen, the economy simultaneously is poorly performing. How will that affect the UK economy? And a massive factor as well for the UK is what is that going to do to the gilt market? Because if that's going to massively negatively affect gilt yields, then that could really pressure in the more medium term the pound. But the annual budget hasn't yet been released. The speech from the Chancellor hasn't yet been made. That will be made at 12:30 GMT. So of course, after that has been released and the speech has been made, we will see more and strong volatility again. Now, if we're looking at the price movements, generally speaking, we can see we've got our 75 bar exponential moving average, which is here. This is our trend line, ladies and gentlemen. We have a price sentiment line, which is the 100 bar SMA as well. The price is very clearly trading below both. Therefore, there is a clear indication that sellers are gaining control of the market again. In addition to that, we can also see if we're looking at the swing highs, ladies and gentlemen, there's a downward tilt to the swing highs. If we're looking at the latest swing lows as well, we can see this is the swing low, and then we've got another swing low here. They are also tilted lower. Even if we're taking into consideration the previous low, which is this level here, we're still seeing indications from wave analysis and momentum that there's a bias to the downward toward the downward price movement. If we're looking at our RSI, it's on an 18 period parameter. We're currently trading between the 25 and 50 level and pointing downwards. We've got no divergence there, very clear convergence. And because of that, ladies and gentlemen, again, it's giving us a bias and an indication of downward price movement. So that's definitely something that we have to take into consideration. The only thing I will say is it's very clear that there was going to be a retracement, and there is a retracement currently taking place. Because if you're looking at the volatility, the traditional level volatility, we're looking at the retracement here, 0.62%. If we look at the retracement here, we're looking at, again, 0.60%. If we're looking at this impulse wave here, ladies and gentlemen, we're looking at over 0.5%. We're looking at the previous impulse wave all the way back here to the middle of March. We're looking at, again, 0.60%. So you can see the 0.60% a lot of the time is where the price starts to retrace. Of course, today it's also massively driven based on what is about to be released and what has already been released. So of course, maybe that's to a certain extent making past data irrelevant. Nonetheless, it's something that we can take into consideration. So we can very clearly see and could have seen that there is a chance of a retracement because we're at the level where traditionally investors start to form a retracement at that point. Nonetheless, though, the bias in the medium to longer term very clearly is pointing towards potential downward price movement. Now, if we're going to switch over to a smaller time frame, here's a 3-minute time frame. We can definitely see we're trading below the 200 bar simple moving average on the 3-minute time frame. So this is still also giving that bearish bias. We're not having conflicting signals, ladies and gentlemen. We can see that retracement. What a lot of traders tend to do is they may look at the breakout. We're about to have a breakout now, any second now. There we go, we just had the breakout. A lot of traders look at the breakout, but the issue with the breakout here, ladies and gentlemen, is that we're still looking at a higher low. But nonetheless, we saw some momentum being regained, they retraced, and traders, especially scalpers, very ultra short-term traders, will look at that breakout level. It is a valid technical analysis signal. That's something potentially traders can take into consideration. Alternatively, what traders can do is they can look at 65% of the retracement momentum being regained. Now, I'm using the Fibonacci tool just to point out the 65%. I'm not actually using the Fibonacci levels, ladies and gentlemen, because they're set levels, they're random. Not all price movements are always the same, so you can't take into consideration with a great effect Fibonacci levels. Very few institutions and professional traders use Fibonacci levels, but I'm just using it to show you very quickly where 65% momentum is being regained. So we have got the breakout level here. Alternatively, this is where 65% momentum is being regained. So that, if we're trading below that as well, that could potentially signal the continuation of downward price movement. The only thing I would say is a lot of traders, because there's already been so much downward price movement, will either take into consideration a very quick take profit or two targets. So for example, they may take into consideration a target here at the support level or slightly above the support level, which is quite close because they want to enter, they want to profit and exit very quickly, and then have a second trade as well where they're aiming for slightly larger take profit. So they're trying to, in a sense, spread and mitigate the risk. So that's one aspect of the market that we can look at, especially if the autumn budget is very harsh, especially if the gilt market negatively reacts, then the downward price movement is a possibility. But of course, we need an alternative. We need to be prepared if we are going to get upward price movement. So for example, we can even look at this as the breakout level or this as the breakout level. It's down to you traders which of the two we want to look at. Some may even look at an average of the two. So these are two levels, and average approximately is going to be somewhere here, for example. If we're going to trade above that, then we have bullish breakouts. A bullish breakout is an indication of upward price movement, and we can look at trading and speculating up to the trend line. But keep in mind, the trend line will continue to fall as the price moves upwards. So approximately the trend line will come and meet the price somewhere here if we are going to get a bullish breakout. At the moment, momentum is very clearly downward. The only other thing, ladies and gentlemen, which I would say to look at and take into consideration, I'll switch over to a 5-minute time frame for this, is to also look at the US dollar index. The US dollar index today is trading higher, but very clearly here we can see that it's dipped since the opening of the European session. It's still remaining above the 200 bar simple moving average, which we can see here, but ideally for the sell signals, for the cable to decline, ideally simultaneously, a lot of traders would like the US dollar index to start regaining upward momentum, because we don't want two declining currencies. We want a strengthening currency and another currency which is declining, so there's no conflict there. So that's it for today, ladies and gentlemen. Hopefully you found today's session educational. We've looked at two scenarios. We always need to look at two scenarios because the market, especially when there's news about to be released, we don't know how the market's going to react to that news. So we looked at two potential scenarios. We've confirmed why the British pound is the worst performing currency of the day, what's driving that downward price movement, and also what's about to be released, which may either see that price movement quickly change or again refuel that bearish direction. So that's it for today, guys. In the meantime, enjoy the rest of your day. Hopefully you found it informative and educational, and goodbye.